With historically low interest rates where they are today, have you ever wondered why some real estate investors will gladly pay 8, 10, 12, even 15% or more for a temporary loan? Stay tuned and I'll tell you why private money loans make a lot of sense to a lot of investors. Hey everybody, I'm Stephen Parker. I'm a realtor and real estate investor here in beautiful Nashville, Tennessee. Today I wanted to quickly talk about private money lending. Private money lending is essentially a private person like myself who loans money to other real estate investors so that they can complete flips or burrs. Now, for those of you who are saying I can go to a bank and I can get a loan for 3%, 4%, 5%, I totally get it. I have no problem going to a bank. My primary mortgage is through a bank at a very low interest rate. But when you're investing, the time and convenience of getting a private money loan oftentimes outweighs a low interest rate. So why would people pay that extra interest? Well, it comes down to two things: speed and convenience. If you go to a bank, you will almost certainly get a lower interest rate. But they're going to want to see your taxes, your debt to income ratio. They're going to want to check your credit report. They're going to want to see your job history and how stable that is. A lot of variables go into that. With a private money loan, you can come to someone like myself on Monday and say, hey, I'm thinking about getting into this deal. Take a look. Let me know what you think. Let me know what your terms would be. And it could be, on Tuesday, I get back to you and I say, hey, I'm interested. Let's go forward. And the attorney takes a day or two to draw up paperwork. You would still be going through underwriting with a bank. If you're up against someone else who is trying to go to the bank to get that loan and you come along and say, hey, I tell you what, I'll give you that same price and I've got cash, I'm ready to go, let's sign. 9 times out of 10, the seller is going to look at that as a stronger offer because it is. You've got cash available, whereas it doesn't have to meet the criteria of a bank. I plan to expand in the future, but for now I'm learning by dealing with people I've known for 30 plus years. I've already seen that these folks know what they're doing, so I'm not worried about them defaulting because honestly, I don't want to end up owning a property that they're working on. I want them to borrow my money, pay me interest, and then pay my money back. And then I use that money to go out and do the exact same thing over and over again. That's one of the things that I like most about lending. I take $100,000, $200,000, loan it to someone, they use it for 4 or 6 months, whatever they need. They pay me interest every single month, and then they pay the loan off when they sell or refinance. And then I take that same money and I deploy it again to somebody else. If you think about it, if you have, let's say you have $500,000 or $1 million and you have chunks of $200,000 that are being loaned out over and over and over, and that money's getting you, an interest rate that you're happy with, and then you get everything back, and then you do it all over again. That money keeps making you money and it starts to stack up. So I actually use the interest that I gain to give myself more money to loan so that I can gather more interest. I started small on purpose so that I could work through some of the kinks and kind of get my side of the game a bit tighter and a bit more streamlined so that I can be a better lender. And then by the same token, I'm learning about the wants and needs of borrowers so that I can accommodate that. And if I need to, charge extra or more for it, or if the market dictates, charge a little bit less for it. But both parties, the lender and the borrower, we're kind of sharpening our knives together and getting better at this, because the end result that we all want is that they enjoy borrowing money from me and I enjoy getting those interest payments from them. It should be a symbiotic relationship. This is not legal advice. This is not financial advice. So your mileage may vary. Please consult with someone as you're going through this. You can't do this alone and you can't do this in a vacuum. I'm learning that more and more every single day. And that's the thing. So far, I've avoided any major pitfalls or downsides, but I've had stuff go south. But I look at it this way. Some days I win and some days I learn. If you go into it with that sort of an attitude, every single thing you do is helping you get better at your game. Again, sharpening those knives, and it helps you be a better lender. More than anything though, it helps keep your enthusiasm for real estate investing going. And it's a whole other side of the business that kind of tickles a different part of the brain than going in and collecting rent every month or whatever, which I also love. Now, I know this was an overly simplified example of what goes on, and there's a lot more that goes into it. And it can be a little scary. I can tell you that every time I wire money, I'm still a little sort of like, take a deep breath. But if you have a good attorney, and I have a real estate attorney who's also a title and closing agent, so he really guides me through a lot of this. And then also having partners that you trust. Maybe some of the more experienced people watching this can comment below and let me know, do you ever get comfortable with lending your own money out there? I mean, there's always the chance that something could go wrong. Thanks so much for stopping by today. If you enjoy this type of content, please subscribe and hit that little bell also. It not only helps me out with the YouTube algorithm, but it also exposes my channel to new folks just like you who are curious about this kind of information. If you have a question, be sure to put it down below in the comments, or you can always reach me at stephenrparker.com, or on Instagram, I'm at Nashville Sparker. Thanks again for stopping by. I'll see you next time.